Hello, everyone. I'm Donna Holly, the president of the Investment Institute, also known as TII. And on behalf of Andrea Zigethy and myself, we welcome you to the second session of our virtual coffee break series. For those of you who don't know us, TII provides non-commercial educational forums for the investment community, which consists of endowments, foundations, pensions, family offices, consultants, and asset management firms. We so look forward to the day we can all be together again in person. And we said that the last time, and we're just waiting and waiting, but we really miss seeing all of you. But in the meantime, we plan to provide you with these virtual educational sessions every other Thursday afternoon. Our next virtual session, number 3, will take place 2 Thursdays from now on Thursday, May 28th at 2:00 p.m. and will feature a fireside chat on artificial intelligence, tech, and automation. Today, we would very much like to thank our special guest speaker, Libby Cantrill, Managing Director and Head of Public Policy for PIMCO, and our fireside chat moderator, Jim Dunn, the CEO and CIO of Verger Capital Management. Jim also happens to be on our TII editorial committee and is quite beloved by us. We couldn't think of 2 more dynamic presenters to keep our audience engaged for the next 45 minutes. Libby and Jim will have a discussion on policy and politics for about 30 minutes, and then we'll use the last 15 minutes to field questions from you all in the audience. So please just take a moment now to locate the Q&A button on your Zoom screen, and we encourage you to type in your questions as soon as you have them. Feel free to do that as the session is moving forward, and we'll do our best to cover it all during the session. At the end, Andrea will have a few announcements about some of our other upcoming events and a little more detail on what I mentioned already. And we just want to thank you again so much for being here. And with that, Jim, take it away.
Good afternoon, everyone. I have the privilege of serving as today's moderator and the host. And I think our topic is an interesting one. For the predictable future, politics will drive economic strategies, and not based on market fundamentals or even rationality these days. So I'm honored to join PIMCO's Libby Cantrill, Managing Director and Head of Public Policy, to discuss the future of markets, capitalism, and investor behavior. So as Donna mentioned, Libby heads up Washington strategy for PIMCO and helps the investment committee and clients think through political and policy risk. Libby did some time in Washington as a member of, working for a member of Congress before joining PIMCO, where she's worked for nearly 13 years. She's got an MBA from Harvard and a degree in economics from Brown. Good morning, Libby. Thanks for taking the time to share your insight with us.
Yeah, hello, Jim. Thank you so much for having me here, and thanks so much, Donna. And hope everybody is safe and healthy and relatively sane. Sanity is in short supply these days, but hope everyone's doing well.
Well, we all echo that. We recognize that you all might not want to join another Zoom call during this time period, but it's the as Donna and Andrea and Liz has mentioned, it's the Institute's intent to get us all back in touch together in person at some point soon. But in the interim, it created this great opportunity for us to connect and challenge and learn from each other. And I think we're very proud to be part of that community. So thank you to Donna, Andrea, and Liz. This has been a challenging time for investors, and even more challenging time for many friends and family, as Libby has alluded to. We would hope that you all are healthy and safe. And this crisis has impacted us all in ways that are unimaginable a few months ago. But we all have so much to be grateful for. And a special note of gratitude to all those on the front lines. Thank you to all of you. So thank you. Most of you, like us, are working, not working from home, but rather you're working at home during a crisis. That's a different differentiating distinction worth emphasizing. So we all have learned something during this crisis, and I want to sort of share my 2 personal discoveries. The first is that in my house, I have a lot of food in my freezer. I didn't know that. I have multiple freezers. I wasn't sure I had that either. I have 2 boys, age 24 and 18, and they can really eat. And they have basically no regard for taste or quality. It's all about quantity in my house. But even in that environment, I've learned that expiration dates are subject to discovery. Turducken is surprisingly resilient in the freezer, and I want to thank Nina Lesaway for that turducken. The second thing I learned was that people can be pretty petty. They can be selfish. They can actually be pretty crazy during this crisis. But others can be heroic and selfless and empathetic and inspiring. And what I've learned is I'd rather surround myself with people who are the latter. So Libby, what have you learned about yourself and your family in this crisis?
Yeah, I've learned I've learned a few things. For one, I have school-age children at home, so I sympathize with your quote about working from home during a crisis. Also, trying to homeschool 2 children while your spouse is also working, you have no childcare. I've learned that what our teachers do at our school is just absolutely invaluable. That they really can't be paid enough. I've also learned that apparently 2nd grade math is much more rigorous than I remember it being. I feel like my son is doing something like multivariable algebra. So it has stumped me and my husband several times when we've been trying to help. And then I guess I'm, a little bit a little bit more somber note. I think what this crisis has sort of exposed is that for those of us who had resources, who were able to work from home, had either financial flexibility or other types of flexibility, this crisis has been inconvenient for sure, but it hasn't been catastrophic. But for so many people, it has been truly, life-changing and incredibly catastrophic. And I think, what Fed Chairman Powell said yesterday about how 40% of people who make under $40,000 were laid off in the month of March. It's just hard to almost imagine how truly cataclysmic this has been for so many Americans. So, while I might lament about my kids driving me insane, I truly am grateful for what I have, and also feel incredible empathy and sympathy for those people who are already kind of living on the edge and unfortunately have really been, sort of knocked off because of this crisis.
Well, let's jump into that crisis and talk about the topic at hand. The COVID-19 pandemic has accelerated the paradigm shift from fundamental investing to central bank intervention and support materially. On one hand, we've got unprecedented economic shock that's resulting in major deflationary forces right now that could easily devolve into a Great Depression. On the other hand, the magnitude and the pace of spending that we've seen from governments is unprecedented. Even if it's somewhat uneven around the globe, leading to this fear of potentially future inflation or perhaps something even worse. All of this raises the question, what should we do as an investor in the range of all these outcomes? So today we're going to focus on four crises that we're all living in, and Libby and I will focus on the 4th crisis at hand. The first crisis is a healthcare crisis. It's a public health crisis. 1.2 million cases in the US, 71,000 deaths. I think worldwide it's 275,000 people have passed away from COVID-19. We've tried to flatten the curve. We talked about tracing and vaccines at some point, but Libby and I are not healthcare professionals, so we're not going to go down that road. It's a different webcast. The economic crisis, 30 million people out of work, a different crisis for all of us. 20% of the workforce is now unemployed. The millions of businesses on the brink of bankruptcy. So I'm not an economist, and Libby's closest we have, but that's a different conversation as well. The third is an energy crisis. You've got the Russians and Saudis sort of throwing oil demand into the mix here. That's a call all by itself, and we won't cover that one today. But we are going to cover the 4th crisis, which is a political crisis. And moreover, it's a moral hazard crisis. You've got an election year, you've got a state-by-state reopening process, unpredictable consumer behavior, structural issues, higher ed, hospitals, college football for many of us. You've got universal income, $3 trillion spent in the US. You've got a red line on litigation, surveillance nation. So to answer some of these questions, we're going to go through and ask Libby her thoughts on some of these views from a political perspective, helping us try to interpret the signals we're getting from Moscow and Frankfurt and Tokyo and Beijing, and most importantly, Washington, D.C. So Libby, let's start out with a policymaker response to the outbreak of the virus. Unlike in 2008, when we had a more sort of lagged and measured approach, we've seen policymakers provide comprehensive and immediate response and stimulus to the economy. You've got extraordinary measures in both public policy, monetary policy, fiscal policy. We got the largest bill ever spent. Have these been effective? And can you detail these a little more for us on today's call?
Yeah, thanks, Jim. I mean, you're absolutely right that unlike right after the financial crisis, when central bankers and the fiscal authorities, Congress in the United States, were maybe a little bit more slow to react or reluctant to react, they have not shown sort of any trepidation about acting in a incredibly fulsome, extraordinary manner. So that includes the central bank, the Fed. Obviously, lowered rates, but also expanded their balance sheet very significantly, ramped up their quantitative easing programs, and also have deployed alphabet soup of credit facilities in order to try to inject liquidity into these markets and to stabilize that kind of access to credit in these markets. On the fiscal side, even though I for a living lament about the kind of polarization and partisanship and dysfunction in Congress, you do have to give them credit. That Congress actually, Republicans and Democrats, despite an incredibly partisan environment, came together. They've passed, as you said, almost $3 trillion of spending over 4 different bills. That includes $500 billion to individuals, $300 billion in an expansion of federal unemployment insurance, $700 billion in funding for small businesses, $500 billion to fund some of these Fed facilities. And they did so pretty quickly, and again, without a lot of the sort of traditional brinkmanship that we've unfortunately got accustomed to. Now, is this all perfect? No, and what we've seen with especially the Paycheck Protection Program, the PPP, which, in some ways, some of us who are kind of more Washington insiders knew was a little bit set up to fail only because the Small Business Administration that was put in charge to administer that is used to originating like $20 billion of loans every year. And here we're asking them to, help to originate or facilitate the origination of $700 billion in just a few short weeks. So has that all been perfect? Absolutely not. Are there some real problems with that program in particular? Absolutely. But I would say, definitely on balance, this has been actually pretty effective stimulus, both on the fiscal side and on the monetary policy side, and we'll probably see more. And we might see some more partisanship around that, but again, I think you have to hand it to Congress that they've been able to put that partisanship aside, at least for now, to get these things done.
When should we expect that more stimulus, and what does it look like? Does it look different?
Yeah, I think it's, so if it didn't really move markets when it was introduced 2 days ago, but the House Democrats, they introduced something called the HEROES Act, which was sort of a successor to the CARES Act, which was that $2.2 trillion spending bill that passed several weeks ago. This House Democratic bill was $3 trillion. It includes $1 trillion to state and municipalities, also expands unemployment insurance, and does a bunch of other things, some which are more on the partisan wish list of Democrats. And the point is that bill is very unlikely to pass the Senate. It will pass the House, but won't pass the Senate. Will not be signed into law. But we could see parts of that legislation ultimately pass. So I think that we are very likely to see increased funding for states and municipalities. They have only gotten $150 billion, and of course, they have been on the front lines of all of this. They also make up around 13% of GDP, so they're actually an important contributor to that national GDP figure. We probably will see more expansion of unemployment insurance and maybe some more funding for small businesses. So altogether, I think we'll probably, I think it's a question of when, not if, that we see additional stimulus. Likely, by June, and we could see it in the size of, say, $1 trillion or $1.5 trillion. So just astronomical figures, Jim. If just a couple of months ago, we would think that $100 billion of spending would be massive. Now we could potentially see up to $4 trillion. So just an incredible amount of money put into the economy in order to combat the virus downturn.
Well, Libby, given all these figures we're throwing around, trillions of dollars on both the Republican and Democratic side, nonpartisan, there's a saying we're all Keynesian in a crisis. Do deficits matter anymore in Washington? Do they matter to the markets?
Yeah, so it's a great question. And we are all Keynesian, aren't we? I mean, just Keynesian on kind of turbo mode. I think that the deficits clearly haven't mattered over the last few weeks. Where the CBO has saying that they're expecting before additional stimulus deficits to run at $3.5 trillion, around 19% of GDP, just the highest number that we've actually ever seen in U.S. history since World War II. I always joke that when the minority party is in power, they're sort of the deficit hawks. They're the ones who want to slow down spending, whether it's the Democrats who don't want to have tax cuts because of deficits, or Republicans, if they're in the minority, they don't want to spend money because they're talking about the deficits. But you're not hearing any of that from either side. I do think, though, that when the dust settles here, come maybe 2021, that some of that rhetoric around, the sort of the deficit hawks will increase once again. You have to remember that after 2008 and the extraordinary spending we saw then, that gave rise to the Tea Party, which really shaped the political landscape for years afterward. So I wouldn't be surprised if there were a backlash. If there were not a backlash after this is all said and done, but it certainly won't be for the next 6 months or so. So long way of saying it doesn't matter to Congress at this point. And what we've seen in terms of bond yields, it doesn't seem to matter to the bond market either, right? The Treasury, the nominal 10-year Treasury yields around 60 basis points right now. I mean, it's nice to be the reserve currency, which we are, and of course Treasuries have this sort of flight to quality characteristic, and that they've benefited that. So as Fed Chairman Powell said yesterday, it's not the time to worry about fiscal sustainability. That time will come, but not now. And I think members of Congress and the markets are sort of taking that to heart.
Well, as an investor with a long-term liability, I may disagree with some of that content. We'll come back to that in a minute. So you mentioned next 6 months are tenuous. It's an election year. I think it's easy to forget that. And in the recent polling head-to-head, former Vice President Joe Biden is leading President Trump currently. What should we make of this early polling? We've seen that movie before. It didn't turn out the way they expected the polling to turn out. And in general, how are you seeing the election at this point, 6 months out?
Yeah, it's a great question. Actually, right before I got onto the Zoom, I was checking the predicted markets, and the prediction markets actually have sort of flipped. They still have about 55% going towards Trump and 45% towards Biden. So it's sort of interesting how those are very illiquid markets. So I'm more inclined to trust polling, even though polling's not perfect for sure. I think the point here is that 6 months out, polling is incredibly imperfect. And as Jim, you said, we certainly learned that lesson in 2016. Hillary Clinton in most head-to-head polls was leading President Trump for almost every month before the actual election. But if you actually go back to even 2012 or 2008, usually the candidate who actually wins has not been necessarily leading in the polls this early on. So I think that the kind of, to underscore that point here, a lot can change. We're in an incredibly uncertain environment, in a very dynamic market environment. And so I think it's hard to extrapolate, 6 months ahead of things. In terms of just, Trump's candidacy in general, there are a lot of advantages that an incumbent president has. It's one of the reasons why incumbents usually win re-election. They have the power of the bully pulpit. They have usually a massive fundraising advantage, and that's true for President Trump. He has had time to really build an incredibly sophisticated digital campaign that Biden, I can tell you, does not necessarily have. And he's also had the time to really frame the narrative around Biden, right? He's calling Joe Biden Sleepy Joe, Beijing Biden, whereas Biden is still just getting his campaign up and running, and he's broadcasting from his basement, right? I mean, his not necessarily breaking through. So there are lots of advantages that President Trump had and still has going into the election. I will just say, though, that the only incumbents not to win re-election are those incumbents who have overseen a slowing economy a year before the election. So of course that was George H.W. Bush, that was Jimmy Carter, and that was Gerald Ford, the only three incumbents in modern history not to win re-election. So while President Trump in many ways has a big tailwind because of these incumbent advantages, you know, the economic hurt and the economic downturn, and we'll see how acute it is, but that could be a massive headwind. Plus, and it remains to be seen, but plus how do voters necessarily attribute or not the handling of the coronavirus by the federal government? Do they blame President Trump for this or not? And that the polling has been all, jumping around on that. So bottom line, too early to say. I would not extrapolate too much from these head-to-head polls. Don't underestimate the big structural advantages that an incumbent president has. With that said, you know, the economic downturn could be real, and that could really hurt President Trump.
Well, the downturn is definitely real. I can tell you that. We're getting a lot of good questions, so keep them coming. We'll get to those in a little bit. I do want to sort of go back on this concept of the election and talk about, much has been made of Joe Biden's choice of running mate at this point. Does it really matter? And when should we expect him to make an announcement? And what are you thinking about the selection process he's going through, not only given the political environment, not only given where his political stances are, but also in a COVID environment? How do you pick one? How do you vet them?
Yeah, so for kind of Washington insiders, like this is, the speculating about the running mate is always, really a fun way to pass the time. I will say though, practically speaking, usually the choice of running mate doesn't really matter. You seldom get voters to vote for somebody at the top of the ticket because of their number two. So it's usually about doing no harm, picking somebody who can complement your ticket, but doesn't necessarily distract from your ticket. And so an example, somebody who distracted was arguably the choice of Sarah Palin by John McCain in 2008, where he had to spend a lot of time trying to defend her versus actually projecting the strengths of his candidacy. In terms of Joe Biden, however, I actually think the running mate will matter more, just because Joe Biden is old, and so I think people will certainly want to make sure that they feel comfortable that whomever he does end up choosing, they can imagine that person, and it's likely to be a she. They can imagine her being number one should something happen to Joe Biden. And in terms of just sort of the framework that people at the top of the ticket sort of use in terms of running mate selection, they're either trying to kind of balance the ticket. So in the example of Joe Biden, somebody from a more diverse background who's younger. So that's Kamala Harris, that's Stacey Abrams, that's Catherine Cortez Masto from Nevada. Or it's somebody who can consolidate the party, so bring kind of both sides of the party together. That's Elizabeth Warren. I, by the way, do not think, even though a lot of the press speculates that she's number one or number two in terms of consideration, I do not think he will pick her for the very practical reason that she is from a state that has a Republican governor. And as a result will be replaced by a Republican in the Senate. And I just don't think Schumer or Biden really will want that to happen. So I think Elizabeth Warren is actually much less likely. And then lastly, or somebody who kind of balances the ticket from an electoral state perspective. So somebody who could help Joe Biden pick up a key swing state like Michigan, so Gretchen Whitmer, or even Minnesota like Amy Klobuchar. I think that's more likely, or I think it's sort of somebody who kind of balances the ticket like a Kamala Harris. Again, I don't think Elizabeth Warren is a likely choice of running mate. And then I guess very lastly, you could see him picking somebody kind of doubling down on the Obama legacy. Michelle Obama is speculated. That's also not going to happen. If you've read her book, she's made it very clear that she has no interest in politics. In terms of kind of timing, we probably should expect him to make an announcement in July sometime. The timing and the place of the convention is sort of dynamic right now. Right now it's scheduled for the third week in August, but it might be mostly virtual. But again, we can see sort of the announcement come a couple of weeks before whenever and wherever that convention takes place, so probably in July. So we'll have a couple more weeks of speculating around the dinner table about this.
Let's talk about after the election. If Trump wins a second election, what do you think his policies will look like? And if Biden wins, what will his policy look like? And compare and contrast the two.
Yeah, I mean, it's interesting. In some ways, I think that there will be likely similar policy priorities. And of course, this is all very dependent on the path of the virus and on the path of the economy. But I think that we would likely see an infrastructure bill being pushed by both presidents, either President Trump or President Biden. That's something that actually does get a lot of bipartisan support in Congress. I think we all will agree that our roads need to be, maintained or resurfaced, bridges need to be rebuilt, but also infrastructure also pertains to things like digital infrastructure, so like broadband to rural communities. So it's something that a lot of members of Congress can get behind, and I think would be a priority for President Trump. He likes to build things, and also a priority for Joe Biden. It probably would take more of a green slant, a more environmental, kind of climate change friendly stance or approach under Joe Biden. So infrastructure, I think, kind of top line will be something that we'll see in either administration. I think if Joe Biden were elected, healthcare will be kind of a number one, sort of up where infrastructure is too. Healthcare, I think, is a big issue, a big mobilizing issue for Democrats. And if anything, this pandemic has again just sort of underscored some of the fragilities around our healthcare system and around our insurance system. So I think that would be also something that he will prioritize. In terms of President Trump, in addition to infrastructure, I think trade policy. Again, this is something that President Trump and I've been talking to our investment committee really since January of 2017 on this. People have a tendency to underestimate the president on this particular issue. They kind of think it's only an opportunistic issue for him, but really, if you go back to what he was saying in the 1980s, this is a deeply seated view of the president's. And so I don't think we could ever underestimate the president in terms of him really wanting to, in his view, correct kind of decades worth of the U.S. being taken advantage of on trade. So I think we'll see trade policy also be a central component of his agenda as well, if he were to win.
Let's take that trade idea and go a little more specific and talk about the discussion around China in the U.S. Even today, President Trump was threatening China. How do you see that playing out in this election and over the next couple of months, not only from a trade perspective, but from a political perspective on both sides of the aisle?
Yeah, we've been talking to clients about this for several months. I sort of foresaw that China would be an easy wedge issue for President Trump, kind of regardless of which Democrat he would be running against, but especially in the case of running against Joe Biden. President Trump is already trying to characterize Joe Biden as soft on China, again, as Beijing Biden. And I think he views this as, again, something fundamental. He really does believe that China hasn't necessarily been a good actor on trade and business in sort of the global landscape. But he also politically understands that this is something, especially after the virus, and sort of speculation about where the virus came from, that actually pulls well with all Americans. So China actually has the most negative view among Americans that it ever has had. Pew just released a research report, a poll 2 weeks ago that showed that 67% of Americans have a negative view on China. So this is something that President Trump absolutely understands. He thinks this is a real opportunity for him to differentiate against Biden. And then there's just a question of what does that mean? So the bottom line is we should expect more saber rattling, more rhetoric, but is it followed by action? My view is that the phase one trade deal probably is not as tenuous as it might seem from President Trump's comments. He's been sort of saying, well, I'll just tear it up or what have you. I mean, you have to remember that we already have tariffs on $360 billion of Chinese imports. And so to increase tariffs in the time of an economic downturn, I mean, Jim, you can agree that's kind of seems like political suicide, right? It's what Herbert Hoover did with Smoot-Hawley. It's just something that doesn't make a lot of intuitive sense. With that said, he could do other things outside of using tariffs. He could and he already has, but he could just increase them. He could put more export controls on China. He could put visa and travel restrictions on China. He can put sanctions on individual Chinese Communist Party members. So there are other things that he can do to sort of help advance this sort of anti-Sino agenda, differentiate himself with Joe Biden, but also not kind of double down in terms of hurting the economy. So I think that my view is that I think is more likely than him actually tearing up phase one, but you can't roll that out, right? And President Trump really thinks tariffs work. So that's also something we have to remember and keep in mind when we're thinking about sort of the future of phase one as well.
He loves debt too, apparently, but I don't like that idea too much. But we'll talk about, how about Russia for a minute? I mean, I think China is the Republican presidential side. The Russian side, this is a question that came through us through the Q&A, so keep those coming. How about the Russian side here? Will the Democrats go back to the Russian and hacking the election and changing the results? What role will the Russians play in this election?
Yeah, I mean, it's a great question, and election security is going to be sort of front and center, outside of just Russia's possible interference with the election, but especially if people are voting by mail, which is I think probably a little bit more vulnerable to fraud and to kind of interception. I think that, the irony about Russia is that this has actually been a real bipartisan issue on Capitol Hill. If anything, it's actually a more Republican issue. They're more, anti kind of, Russia folks in the Republican Party than they have been in the Democratic Party. So it's a little bit of the jujitsu that President Trump does around some of these policy issues that now Republicans are sort of defending Russia and Democrats are anyway. So it's just another example of how much the political landscape around these issues has changed. I do think that we will hear about Russia from the Democrats going into this campaign in the election. I'm not sure it actually really matters. I think especially in this time of COVID, people are really much more focused on kitchen table issues. How am I going to pay my rent? How am I going to, get food versus, foreign policy issues? But sure, will we hear about this? And will Democrats think this is a vulnerability for Trump? Absolutely. I'm just not sure electorally if it's really going to make a difference.
Let's take it down a level and talk about the Senate races and some of the betting odds on the Dems sweeping, the Republicans sweeping, and then maybe speak to the 4 or 5 key states that will have an impact not only on this election, but also given the COVID, what will that play like the Connecticuts of the world and the Pennsylvanias and so on?
Yeah, so I think that the down ballot races, even though they're a little bit less sexy than the White House, so everyone's focused on the horse race for the White House, and for good reason. But I would argue that from an economic perspective and from a markets perspective, the composition of Congress matters just as much, and that's because you need Congress to pass any kind of real market-moving legislation. There's, things that the president can do unilaterally. Trade policy is one of them, but most things that actually help the economy, Congress has to be cooperative around. So, long way of saying the composition of Congress matters. The Senate, of course, is controlled by Republicans right now, 53-47. I think if you look at the seats that Republicans are defending in particular, so 35 seats are up for re-election. 23 of those 35 are being defended by Republicans. So they're much more vulnerable going into this election from a Senate perspective. And of those 23, about 7 of them are in important swing states. So, I think at this point, a rule of thumb really is kind of how goes the White House, so goes the Senate, meaning that if Trump wins re-election, he probably does pretty well in those swing states. And there is sort of a coattail effect that the people in the down ballot races probably do okay as well. And vice versa, if Joe Biden was to win the White House, he probably did so because he did well in states like Colorado and Maine and North Carolina. Again, all those states that have vulnerable Senate races as well. So I think that the Senate will likely kind of go the way of the White House, but, and an important but here, if the Senate does go Democratic, for instance, it will probably do so by like 1 seat, or it could be a tie. And it won't be enough to have a filibuster-proof majority. Democrats wouldn't have a filibuster-proof majority, nor would Republicans have a filibuster majority if they kept the Senate. And so from a policy perspective, that just practically means that there are few things you can do to pass the Senate without 60 votes. You can pass tax bills, and we saw the president pass tax reform with only 50 votes, not 60. That's because he was using something called budget reconciliation. I won't bore everybody with that. But for most big policy moving or market moving policies, you need 60 votes in the Senate. So the bottom line is the Senate is absolutely in play, probably goes the way of the White House. But markets don't freak out if the Democrats take back the Senate, because they can only do so much without 60 votes. In terms of just briefly of the swing sort of states, I mentioned a couple of them. They're probably around 15 total. You're in one of them, Jim, North Carolina. But really importantly, they're probably only 5. So if you're really, kind of a Politico, want to just look at, the 5 swing states that will really matter, it's going to be Florida, Pennsylvania, Michigan, Wisconsin, and Arizona. Arizona's kind of new to the scene, and also shows you how demographics in some of these states actually are changing the political landscape. So, look at those 5, those 5 states in terms of the presidential election. Look at like the underlying economic conditions. Michigan and Pennsylvania are looking pretty bad right now, honestly, and that could be negative for President Trump's reelection hopes. Again, early days though. So those 5 will be the most important. But again, because of the overlap between the Senate races and those swing states, it looks likely that the Senate will go the direction of the White House.
So given those states, and given the political environment in those states, and given some of the challenges they have, both pension obligation and unions and other things are going on, and basically the comment around income inequality, how much will that come back to be the front and foremost of the political discussion over the next 6 months?
Yeah, I think the Democrats will absolutely try to make that their own wedge issue, right? They will try to say that, President Trump and some of the policies of his administration have exacerbated inequality because of the tax bill and other policies, some of the regulatory policies that has only widened the gap between the haves and the have-nots, and has left us, has left the economy more vulnerable to this COVID-related downturn. So will the Democrats absolutely try to exploit that for their own political game? Totally. I think that the more interesting question from an investment and markets perspective, though, is fast forward to 2021, does this matter, right? Does sort of these cracks in the social safety net, which I think people can sort of acknowledge from both a Republican and a Democratic perspective, does that lead to more kind of federal intervention in some of these areas? So healthcare is one that we talked about. Paid family leave is something else that other countries have that the United States doesn't have, and the downturn has sort of exacerbated or shown a spotlight on some of the deficiencies around that. So I think that's the bigger question. Like, will this be used for electoral politics? Totally. Does it actually have policy implications in 2021? Maybe. And I think it's just too early to tell, and obviously will be predicated on who's in the White House and then who's in Congress.
Well, we've got a few minutes left. Let's wrap up with 2 more questions. I think one, and both for investors. So one of the questions that came across, I think is a great one, is the views on negative rates. The Trump White House is pushing hard on the Fed to have negative rates like around the world. And as an investor, how do we think about negative rates in this election period? Will we see negative rates?
So that person who asked must understand that we were talking about that in our investment committee just the other day. I mean, this is something that's a hot topic at PIMCO. I have a strong view on this. I think we have to take Powell at his word, and you saw him reiterate that yesterday. He was relatively unequivocal yesterday that negative rates are not on the table. We have the good fortune of having Chairman Bernanke as one of our advisors at PIMCO, and he's like tells us until he's blue in the face that he just thinks that the Fed will not go to negative rates. And regardless of sort of the economic environment, because of their impact on banks, on money market funds, and also just because it's been pretty specious in terms of dubious in terms of how impactful they've been in places like Europe, Jim, to your point. I think all of this, even despite the real political pressure that Powell may be getting from President Trump, even though there's always a speculation that President Trump may, fire Powell, he really cannot do that. The law is pretty clear that in order for a president to fire a governor of the Fed, there has to be, clear negligence or clear fraud, neither of which, Powell has done. You can't fire somebody just for, differing about their monetary policy decisions. Now, he could potentially kind of demote Powell from the chair position, but, I think he would be very loath to do that. And knowing some people who are advising him, I think that they would be very loath to be advising the president of that. So, I take this as all sort of jawboning. President Trump likes to run against something, and I wouldn't necessarily take it all that seriously. And again, from a legal perspective, he can't actually really do that much. He can't actually force the Fed to make to take the rates negative, and he can't fire Powell either.
Well, let's close with one last question. And what is the maestro and the committee at PIMCO thinking about as investment opportunities in all this uncertainty and all these things we talked about? Where do we invest?
Yeah, I mean, it's like the $64,000 question, right? $64 million question. Or $64 trillion question, right? Exactly. Yeah, I mean, so we were pretty conservatively positioned going into this, especially from a corporate credit perspective. So we saw some of the excesses in corporate credit, even late last year, kind of weak covenants. So we were pretty light on more of the kind of vulnerable parts of the credit market that have not performed well during this downturn. The areas that we do like, so we were sort of like well positioned in some ways to be a bit of a liquidity provider. So to look for areas in the market that were dislocated technically, but not necessarily impacted fundamentally. So had pretty good fundamentals, pretty good credit quality, but just had sold off for various reasons, for selling, deleveraging, what have you. So those areas of the market are kind of areas that PIMCO has always liked and sort of specialized in. Non-agency RMBS, so the kind of non-QM loan securitizations, reperforming loan securitizations we like. Those are very kind of well credit enhanced, but have, again, have been dislocated from a technical perspective. CMBS, other areas of the ABS market. And then, in some areas in the corporate credit market, we're finding opportunities as well. But again, we're a little bit, because we have daily liquidity vehicles for much of what we manage, we are a little bit more cautious around those sectors. So ABS and non-agency RMBS and some CMBS, we think are great buying opportunities right now.
Well, I think we're running out of time here, so maybe we'll just wrap up with again, questions like these, while probably muted during the pandemic, are appropriately so at the time. But we've asked a lot of hard questions, and I think we'll see over the next 6 months, these will all be put firmly on the table. And my view is we need higher growth, sustainable growth, inclusive growth, and not bank-fueled accelerant that'll burn off quickly and merely kicks the can down the road. So I think Fed liquidity should be used like lighter fluid. It should be used carefully, stroke the fire of the economy a bit, pour it constantly on, it's arson. So we hope that we get some sound decisions from Washington, D.C., and then followed by Moscow and Beijing and other areas. So I hope you all found this in a discussion enlightening, entertaining, and helpful, and hopefully it can help you position your portfolio going forward. Special thanks to my co-host, Libby, and for Donna and Andrea and Liz at the Institute for putting this all together. Stay safe, stay healthy, and apparently stay liquid credit. So have a great weekend, everyone, and I'll turn it back to Andrea to close us out. Thank you.
Thank you so much, Jim, for everything. And Libby, we can't thank you enough for doing this. We were supposed to have you in person in May in North Carolina, so thank you for doing this. We're so grateful to both of you. Jim, you did a great job. We favorite work from our editorial committee member who helps us through everything. So we got to have a great talk with Jim, who gave us some great advice for moving forward. And Donna and I are really going to work it as much as we can to be with you all in October. We are sending you out surveys after this. It's 4, you thought you can get away with that by not being in person, but there's 4 questions coming your way just to get a little bit of feedback. And we'd really just like to know from you when, how you felt Libby and Jim were on this, the timing of the seminars that we're doing. We know it's hard to stay at home and listen to these, but we want to know how we're doing and how we can change it moving forward. But also we want to know when you're going to be comfortable to travel. It's really important you answer that question. We want to get together in October in a safe way, but we want to get together in October if you all are going to feel comfortable traveling. So please let us know policies, anything that you can. Again, we're not asking for sponsorship for these videos. We have so many supporters and sponsors and members. Thank you to all of you that are on this call that we're hoping to see you either, whether it be October, whether it be May of 2021, but we can't wait to get together in person. And the next one of these will be, as Donna mentioned, on May 28th, 2 o'clock. The topic will be on AI, tech, automation. We're lucky we have Rudina Cesari from Glasswing Ventures, and another editorial committee member, Don Lindsay, will be moderating a chat together on that session. So you could go to our website now. It's up and you can register right there on the website. Also, I have emailed a lot of allocators that are on this call and many other ones. Really, if you could get back to us, they're filling up quick. But May 19th and June 2nd, we have sessions that are for virtual allocators only, asset owners, and 10 per session is all we can really fit. We're squeezing in 11 on some, but we do have openings still on May 19th and the morning of June 2nd. So if you can let me know as soon as possible, we'll add you to one of those. And again, thank you, Libby, and thank you, Jim, for being such good friends. We couldn't ask for better friends. And thank you, Donna, and thank you, Liz, and everybody who's done this Zoom call. So thank you so much.
Thank you.
Yeah.